Hello, everyone. Welcome to NFP Live. I'm Shane Vernier, head trading coach over at howtotrade.com. Welcome to our Switch Markets community. This is the first week that we've been running every single day on our Switch Markets TV channel, so be sure to check that out on YouTube. We're also available at How to Trade and Forex Signals. So welcome to everybody across our network of YouTube channels. We're going to cover NFP Live for you today. We're going to give you some analysis. We're going to talk news of the day. We're also going to break down the actual number, what it is, why it's important, and also some key markets and key levels. I've got a few of them for you. It's been a pretty darn good week. On Monday, if you remember, if you caught me for the week ahead, I said it's going to be a brutal week, tough week. This has been a pretty good week. This hasn't been a bad week. There's been a lot of news, a lot of action. The big thing I want everybody to remember is the markets are a little bit thin. And what that means is there's not as many people here as there usually are. Why? The 4th of July holiday in the United States. Independence Day is tomorrow. A lot of the big money already went on vacation. I see them around here. They all went fishing. They took their millions and went fishing. So hopefully in a year or two, you'll have your millions. You'll be able to go fishing as well during these holiday periods. So I want to welcome everybody back. I see a lot of familiar names, a lot of new names. Ike, good to see you. Ike Kingsley, Nare, Akapo, Yugoslav, good to see you guys. Lita, always a pleasure. Lita, Jeanette joining us from lovely Australia. Hey, Jeanette, how's it going? I'm sure you're looking at gold. Tuku, always a pleasure, guys. Okay, here we go. Let's go ahead and get to it. I want to start off with our 920 EMA strategy and a Bitcoin buy that we talked about the other day. I mean, it really was a pretty darn good move. Our 920, real simple strategy. When the 9 EMA crosses over the 20, we're looking to buy that market right there. A gold bar right there told us to go long right around 107, 367, somewhere right in that zone. And you can see we've got the big move that we were already looking for, about $2,500, and we went right up to the high of 110, 292, and we rejected that zone. So it's for me, I look at a strategy like this. I look at a daily chart. I'm thinking Bitcoin. I'm thinking crypto. Do I have to trade this in a derivative style? Do I have to over leverage myself? No, I don't. I could step in with cash right here and make a play and do fairly well. So, I mean, think about it. If you just played cash on this Bitcoin play, about 107.5, if you got in right around there, you still got a nice bounce right up to 110, 2,500. 2,500 divided by what, 107? What are you, right around 2%, something like that? That's not a bad little gain for about a day, and I don't think this one's done yet. We're looking for about 117 as a topside target. I do believe we get there, and I love 125 up here as being a legitimate target to have by the end of the summer, by Labor Day. Now, I'm giving myself about a few months there, but the big news is the big, beautiful bill. We're going to talk about that. Nobody's talking about how that's going to impact crypto. I think it's going to be a big-time bullish break for crypto. I'm going to talk about that in a minute. We're talking NFP. We've got 8 minutes, and we have also got some key levels we need to look at, too, ahead of the NFP release. Justin from the Netherlands here, too, for the first time. Well, welcome. I'm glad to see a lot of new faces. Love new faces. If you have any questions at all, be sure to ask. This is a tough stream. I'm going to be moving fast and furious, but I will answer your questions toward the end of it after that NFP number drops. Let me see Ebenezer. Good to see Ebenezer. Steve France. It's always a pleasure. Guys, we got a bunch of different communities here. We got our How to Trade traders, our How to Trade community. We've got our switch market traders. Remember, this is about developing you as a trader. A little bit about me. I've been in since 2011. I've been trading a long, long time. I've done probably thousands of hours of these live streams. Sometimes they go well, sometimes they don't. Today we're going to trade a couple of strategies after NFP, and we're going to try to make a few bucks. And I think we'll have an opportunity to do just that. I really do like a couple of these short-term, some of these short-term strategies. Scalping strategies are fantastic, and they're ones that we've covered on our How to Trade Com YouTube channel. So we're going to go ahead and try to scalp a couple of things here. Number one, this is our 9 EMA with RSI confirmation strategy. We're going to pull a 1-minute chart and try it on the spot gold market. We're also going to look at U.S. equities indices futures. If you're in the United States, we're going to look at a couple futures contracts as well. So we're going to try to get some scalping going right there. We may look at a 920 after towards the end of the stream, maybe a 5 or a 15-minute chart, potentially get a play going into that U.S. Open. And then, of course, I've got my Fibonacci levels that are huge. They're a little bit off of the pace, what I call off of the pace, meaning we're going to have to get a big move, but we've got a potential level in the Euro USD and a potential level in spot gold to check out. So that's where we're at. We got a million things to do, so let's go ahead and get to it. Sworn off gold. Yeah, I'm going to cover gold here in just a second. Remember, if you don't have a broker, if you need a broker, Switch Markets, bring your ambition into focus with thousands of markets, low commissions, and very, very tight spreads. So go over there, check out Switch. If you're an international client, they can get you up and running very, very quickly in the markets. So definitely do that. If you're in the United States and you need a broker or you're not really sure who to trade with as far as a Forex or a futures player, go ahead and reach out to me over at How to Trade directly. Send me a private message, and I'll sort of tell you who I do business with and a few of the names that the How to Trade community is familiar with over the years. All right, here we go. NFP, this is a rare NFP release on a Thursday. Why? Because tomorrow is the 4th of July. What is NFP? It's just an employment metric. We could sit here and talk about what it is and what it means. We're not economists. We're traders. We are not economists. We're traders. You don't need a PhD in economics to get in here and make a few bucks today. You don't need that. What you have to be is smart. You have to understand risk and understand that this is going to move the market. So we could talk about what it is. I could tell you why it's important. It's not really that big of a deal. We're going to trade the action, and that's what we're here for. We're going to trade the action. Remember, no matter what the number is, no matter what it comes in at, okay, leave that to the media. Leave that to the talking heads to worry about, what does it all mean? What we're interested in is the previous release and our projections. Now, if we come in maybe above projections or below projections, that's going to give us a market move. Now, it's going to be an interesting thing to watch because if we are above expectations, all right, it's going to be bullish for the USD. If we're below expectations, that's going to be bearish. Well, how does that impact our markets? Well, if we're above expectations, it's going to be bearish for equities and commodities. If we're below expectations, that's going to be bullish. Why? Because if we're above, it suggests that maybe the Fed can hold off on interest rate cuts, and because the employment market, the U.S. labor market, is that strong. Typically, if you hold off on rate cuts, right now the world's cutting rates except the United States Federal Reserve. If you hold off on rate cuts, that means a stronger dollar. That's going to put downward pressure on equities. If anything really can sink the equities markets, we don't know. We've already seen wars. We've seen political tumult. We've seen everything, and nothing can sink equities. So can Fed policy sink equities? I don't know. In any case, below expectations, that's going to suggest we're bullish for equities. That means that, okay, we may have to cut those interest rates to make sure that our economy booms. Here's what we're expecting out of June's numbers. The previous release was 139,000. We're looking at 111,000. The unemployment rate is the big deal for me today because we're starting to get above that Fed benchmark of 4.0. 4.0 is the magic number for the Fed. That's the one they always look at. Now, projected, we're looking for a rise in unemployment to 4.3. Don't be surprised if we get a big surprise there. I'm looking maybe like a 4.4, a 4.5. I got a feeling this could be a really pivotal report. Of course, I say that every time, and they're impossible to call. We just don't know what's going to happen. Unemployment rate is the key. 4% is the Fed's benchmark. Remember that. We're starting to move decisively above that. You see right here your historical levels. Very, very, this was the COVID. I would throw that out. That doesn't mean a whole lot. This right here, though, 2008 to 2012, I lived that. That was ugly stuff. 9% unemployment in the United States. It meant a deep, dark recession. Really, for the entire world, that was the global financial crisis of 2008 to 12. So let's go ahead and take a look at a couple of these key levels. Let's start with gold. Really love this daily market structure. I use Fibonacci retracements. If you're interested in what I do with the Fibonacci counterpunch, I have a big tutorial in a trading, not necessarily a workshop, but a course inside the How to Trade trading room. Go ahead and check that out. It's under the Elite Trading Series. It's not the easiest thing to master. It really isn't. We do a lot of crossover stuff and a lot of opening range breakout stuff because it is easier, but this is based on fractal geometry and really the utility of the Fibonacci retracement sequence. I'm a big believer in Fibbies, guys. A big believer in Fibbies. Been using them a long time. In any case, right there, from that swing low to today's upper extreme, and now we've got a pullback zone, maybe 38%, right down here at 33.20. That could be an absolute huge trade, but it's about $29 away. One thing I would definitely be looking at if I'm trading gold, 13-period EMA. That's my bread and butter. Everybody uses a different EMA. That's my bread and butter right there. 13-period EMA is right around 33.37. I would be watching that closely. And also, I've got a Bollinger midpoint at 33.34. So if a person was interested potentially in a short-term support zone, we would be looking right here. Right in that zone. So we'll see how this holds up. We'll see if this we catch some bids from that level. I believe we will. I would much rather play 38% down here from like 33, 22, 50-ish, maybe even 33, 25 to be hyper aggressive. I like that area right there. Still bullish towards gold, but gold has definitely changed, everybody. It's not the breakout winner that it used to be. We've been going sideways for a while. We've got some pretty good movement this week. You've seen some decent move out of spot gold. Yesterday was tough. It was a killing field. Today, I think we're going to get a big move. Now, is it bullish or bearish? I don't know. I really don't know. We got to wait and see the number and wait and see how the market reacts. Let me see. Yes, sir. Good to see you. Yes, sir. Kicks, buying or selling? What do you want to buy? What do you want to sell? I'll do both. I'm not, hey, listen, I don't worry about buying or selling. I just get the job done, get in there and make a few bucks. So that's a pretty good look at gold sworn off. That's how I would be really trading this going into this. And we're going to take some short time frames and some different strategies to approach this price action. But I got to see the number drop. And we're just about a minute away from the number dropping here. So let's go ahead and wait. We are going to go ahead and recap the employment situation after the number does drop. I'm going to refresh this. We're going to look at our top line, and then we're going to look at all of the changes. And I'll talk more about that when the time comes. This we're watching minute by minute. Right now, the big, beautiful bill, one big, beautiful bill. The U.S. House of Representatives has put it up for a final vote. They're going to vote on that thing today. That could pass. Today is going to be a very, very tricky type of environment. So NFP is huge. Don't get it twisted. NFP is huge, but that big, beautiful bill, probably a little bit bigger. Okay, right there's our gold move. Are we in fact going to get a shot at our key level down there? Let's go ahead and go to our 1 minute chart and see what we've got. That right there is our happy zone, and you can see pretty good price action here. We're going to go ahead and hit right in this zone. Are we going to bounce up? Okay, right there, big time bearish move. That would have been a real tough trade to take. I don't recommend trading 5 seconds after the NFP report, but this level right here is coming into play. So if we were in fact going to look to buy, I would have my buys probably in right there at about 22.50, 33, 22.50, somewhere right in there, maybe even 73. That's a pretty good zone. Right now we're seeing the big bearish move. That suggests maybe a hawkish dollar. What was the number? Does anybody have it? I'll go ahead and look at it right now, but that's a pretty darn good move in gold. That zone, though, you can see took a big draw. It doesn't get any tougher than that, guys. It doesn't get any tougher than trading 5 seconds right after the report. Okay, let me see. The employment situation, June 2025, total non-farm employment increased. Total non-farm payment employment increased by 147,000 in June, and the unemployment rate changed little at 4.1%. That's huge. That's a big-time surprise for everybody involved. I was calling for 4.3, maybe even 4.5. 4.1 is a big-time win. It's a big-time win for the Trump administration. It's a big-time win for the folks that are saying, hey, tariffs aren't going to hurt that bad. You're not going into a recession. That's a big win. It doesn't sound like much, but that shattered expectations to the top side. We were looking for the number to go down. It actually went up. We're going to talk about the revisions here in a little bit towards the end of the stream. But for me right now, that's a big-time hawkish number. That suggests that maybe the Fed's not going to cut rates until September, maybe later this year. That's for sure. Let me see. Bruce Gordon, 147. Got you, Bruce. Loud and clear. Thank you. We're seeing a little bit of compression right around this zone. This looks to me like we're going to come off and actually get a chance at our macro level. So I'm going to go ahead and curse around to some other markets. Euro USD, love this level in the Euro USD, 116.85, 38%. I would be looking at 117 flats probably. 116, 116.92s. I believe that's what our trade idea yesterday was. I put out in the analytics thread. So maybe 116.92s, 93s. The entry points always are a bit tricky. You want to shade up in front of those numbers. You want to shade up in front of those support zones on a buy. You don't want to go right at 116.85. You want to make sure you get into it just in case the bidders step in and defend that level just before price gets there. That's what I'm looking at right there, though. That's a pretty darn good trade. I think that we're going to get a chance. We're going to get an opportunity to trade some of these levels, and that's all we can ask. This is a big-time bearish print for the U.S. dollar, or excuse me, a bullish print for the U.S. dollar, which essentially is going to be bearish for something like the Euro USD. Remember, base currency, counter currency. Right now, we're watching the USD, the counter currency in this pair, gain a little bit of puff. That's bringing the market off. I know, if you're new to Forex, it can be confusing. Don't get too lost in the minutia. The big thing to remember right now is that the DXY, the USD, is gaining strength. Let's go ahead and take a good look. Let's see, what do we got? We got our Bitcoin. Bitcoin coming off just a little bit, but relatively unchanged. That's a good sign if you're a Bitcoin bull. Let's go ahead and go to our DXY on our 920. So right here, what do you have? This is the U.S. dollar index. This takes into account the performance of the USD against the majors. That's a big move up. The dollar has been dead as fried chicken. It's been dead as disco. And now we're starting to see this asset, which has been the hardest hit, no question about it. The U.S. dollar has been in the tank since Inauguration Day, January 20th. Now we're starting to settle in and see what can happen if, in fact, the Fed decides that they're not going to cut interest rates because that jobs market is better than we expected. Remember, your central bankers only have two jobs. Now, they make it look hard and they make it look fancy, and they're always in the media, and they're pretty much rock stars. They have two jobs: promote maximum employment and promote pricing stability. The world's central bankers have failed miserably at promoting pricing stability. They should all be fired, and we should start again. What has happened since COVID has been a classic example of flooding the market with money, the rich getting richer, the poor struggling because all those prices went up. There's no question about it. I'm sorry, but that's the honest-to-God truth. Now, what happens if all of a sudden the Fed says, okay, we're going to attack inflation because our employment market is strong? It should bump the dollar. There's no question about it. The problem is nothing's bumped the dollar yet. Right now, the DXY is trading at 97.344. This has been an absolute killing field really since Inauguration Day. It's been the big loser. No question about it. This is an according to Hoyle downtrend. Right there, where do you think we topped out at? 13th of January, the week of, there's Trump's inauguration right there, and the dollar has been just absolutely getting smashed ever since. In my view, I don't pick bottoms. I don't try to pick bottoms, and I don't try to pick tops. The fundamentals are there for the dollar to rally. Will it? I got to see more. I need to see some prima facie evidence that somebody's going to bid the greenback, or else I'm not interested. But you can see right here, you had a bearish signal on this 920 weekly crossover. You caught that big move there. You also caught this big move here. It's a pretty good little strategy. All right, guys, let's do some high-impact scalping and see where we're at. Okay, here's your spot gold. This strategy right here is one of our most popular by far. No question about it. No question about it. Now, what this is this is a 9 EMA with RSI confirmation. For those of you that don't know, the relative strength index, RSI, is going to be what tells us to trade, what's going to be our trigger, what gets us into the market. When price breaks above or below the 9 EMA, then you're going to trade. So in this case, honestly, you already pretty much crushed it. You had a sort of a sell. We were in overbought territory, up above 70 on that RSI. That was telling us to sell on a bar close. So basically, you're selling somewhere down here, maybe selling somewhere right up in here before the number. That would have been really risky. But now, where are we at? We're in buying territory. We want to buy this thing. And you've got the RSI deep into oversold territory. And now, what do we need to get to really trade this thing? You're in oversold territory. This is a 1-minute chart. Now, I don't recommend trading a 1-minute chart really on anything, but right now you can probably get away with it because there's that much participation in there and there's that much volatility. So if we do get a break up above the 9 EMA, then we're looking to buy. Deep into oversold territory, we're going to go ahead and put our stop loss beneath this swing low, wherever it sets up at, and then we're going to go ahead and we're going to look to fire our guns to the top side and maybe get a bid. So I'm watching this closely. I think we have an opportunity here to trade this one live. Let's go ahead and stick with this strategy. I'm going to go ahead and duplicate my tab and see exactly what we can do potentially with another market. Now, I know there's some futures traders out here. I myself am a futures trader. A lot of folks love the NQ. They love the E-mini NASDAQ. Now, you can see what's developing here. The E-mini NASDAQ on this 9 EMA is going to be the same exact thing. It's going to be the same exact thing except what? Inverted. Think about it. You're looking for gold to start rallying now. What would a gold rally mean to stocks? Potentially, you're going to see that negative correlation and get a pullback here in your U.S. equities market. So right now, we've got good volatility, we've got good volume and good participation. So this NQ, what are we looking for? We're looking for a bar close beneath our 9 EMA. That's what we want. Remember, all of these are demo dollars. There will come a time when I'm cleared and given the thumbs up to trade real money in front of you. Maybe it'll be next week. But for right now, these are demo dollars. This is for instructional purposes only. And remember, the leverage that I use here, you can only use that leverage 3 to 5% of your trading account. I'll give you 5%. Typically, you like to see 1 and 2% of your trading account on any given trade, but we will go as high as 5%. I will sign off on that. I'm thinking about allowing 7%. But I don't know if I could sleep or live with myself if you guys were taking 7% risks on each trade. Most big players, most folks that are well capitalized, they're taking like 0.5% risk per trade, but they take a lot of trades. So maybe, just maybe, this is what we're looking for right here. Okay, rules are easy. I'm going to go ahead and I'm going to put one contract on this. We're going to be looking for a bar close right here. We've got 25 seconds. Our RSI is in overbought territory. We're looking to sell this thing. And right here, we will sell as soon as we get a bar close beneath the 9 EMA. Now, it's imperative that you have a confirmation tool like RSI in order to do this on short time frames. Longer time frames, join one of our workshops. I'll show you how to do that on a 4-hour or maybe even a daily. But right here, I think we're going to go ahead. We got a market order sell. Are we going to sell this thing? Okay, there's our sell. Okay, so we're short this market right there. Now, every trade has 3 parts. You have an entry, you have a take profit, and you have a stop loss. Now, the stop loss, we've been putting down physical stops because that essentially is what we need to do to sort of manage these trades in real time. That's going to be right above your swing high, somewhere up in there. I always pad it a few pips, and that's really what we're looking for there is to get a nice big move. Now, profit target. You can do this a number of ways. You can do it with a 1-to-1 ratio, something like this, or you could base it on a market structure. You could be shooting maybe down for this trough somewhere. That's not necessarily the worst idea in the world. Or you could be looking for key levels. Maybe you want to take a shot at your overnight lows, or maybe you want to take a shot at yesterday's lows, betting that we caught the top of this thing today. You can certainly do it. Any of those are acceptable. For me, I'm a big fan of 1-to-1. So if we were, let's see, we're short from 22,904 and we're looking at 22,939. So we're going to have to get 30 points. You know, we should be able to get that. I would think 30 points is going to put us down there somewhere right around 22,800. 22,870, something like that, somewhere right in there. And listen, this is math. I'm doing math on the fly right now. So if I do make a mistake, I catch a lot of flack on YouTube for making a mistake with the risk versus rewards. But when you're moving this fast, sometimes you make mistakes. Okay, so we're rocking one lot here of E-mini NASDAQ futures, this is a completely, perfectly legal trade, I would say. I think that this is doable, especially if you're trading prop. If you have a prop, $50,000 prop account, you can take this trade. There's nothing wrong with that. Now, a lot of folks like to execute these 9 EMAs in different ways. Everybody hates the idea of this swing high. Not everybody. I like it, but the swing high, they don't really like that. They believe the risk is too big. So a lot of folks put their stop loss right above that trigger bar. This is what we would call the trigger bar, the bar that closed beneath that 9 EMA. So the question becomes, okay, am I playing too tight or too loose? I believe that on a 1-minute chart, this is way too tight, and you're going to get stopped out almost, most of the time. I would say that that's typically the case unless you get into a real hot runner, and then, your risk versus reward is definitely in your favor. You're looking something like a 1 to 4, maybe even a 1 to 3, 1 to 4 right there, and that can be great. That's the traditional way of trading. That's how everybody online is going to teach you how to trade. They're all going to say, hey, it's got to be a 1 to 2, 1 to 3, 1 to 4, 1 to 5 for you to ever make it in this business. And it simply isn't true. I like 1-to-1s. I want my traders, I want everybody I'm talking to be winning all the time. I want you taking money out of the market constantly. Now, if you play tight like that, you can do that. I mean, we could easily just modify our trade and say, okay, I want to do something like this. That's just a 1-to-1 and go ahead and just expect it to be a real tight scalp, not risking much, not really going to make much. And there's nothing wrong with that. For me, on a 1-minute chart, I've done this long enough to understand there's no rhyme or reason behind any of it. A 1-minute chart's about as choppy as it gets. And you can start to see Chop City setting up right now. That's very difficult. For me, I want to catch a move. So let's go ahead and stick to our 1-to-1. I want to catch that 30-point move. We may not catch it. Price may reverse. You may see the uptrend continue. I can tell you that with that type of NFP number, though, that's going to be tough. That's going to be tough for stocks to push that much higher. But listen, it's possible today. And the reason why is that big, beautiful bill. The House is more than likely going to pass that thing. And if they pass it, it's huge spending. It's going to be big for stocks. It's going to be big for crypto. Also, tax cuts come into play. What happens if they don't pass it? What happens if they get into a heck of a fight and all of a sudden that bill comes off the table and Trump doesn't get it by the 4th of July to sign it? That could crash stocks. That could really crash stocks. This is a delicate situation today. Be very careful if you're trading. You have to really understand the dynamics of what's happening. Don't get caught. Don't get caught with your hand in the cookie jar. Right here, you can see the market's just starting to chop. We may win, we may lose. You can see right here just a quick look at price action. A lot of you really love price action. So do I. It really does tell us the story. This chain right here, this is what we call a very thin chain. That's your NFP bar. This right here is just dominated by there not being enough sellers in the market. The buyers won. There weren't sellers at every one of these levels. That's why we saw the big move. That's called a thin chain. That's what I'm targeting. That's what I want to fill in. And you can see this support zone right here, right above this chain. This is where bidders are trying to preserve the trend day up. If they lose, the market will fall away and come right to us. And I'll have a lot of confidence that we're going to win this thing. But that line in the sand, we've got to get in there and fill in that chain, unless we could be in big trouble. For me, I really like the side of the trade we're on, but anything can happen, guys. This is active trading, and this is scalping with the 9 EMA and RSI. Right now, things don't look too bad. Let's just wait and see. If we break down into that chain, we have a real good chance of winning that trade. E-mini NASDAQ futures. Here we go. Now we're cooking. Now we're cooking with gas. Fill that chain in. Fill it in. Gobble it up. Listen, there aren't going to be buyers at every one of these levels. Right now, the sellers are stepping in and they're saying, okay, this right here, we question it. We don't believe in this run-up. We don't think that this is exactly the way the markets are going to unfold today. And now we're starting to fill in. The question becomes now, if you're a 9 EMA trader or an EMA trader, what do I do with myself? Do I stick with it? Do I keep going? Do I take the money? Your success with a strategy like this will be predicated upon your ability to stay in the market. Now, I got my eye up there on gold. It looks like we got a big move out of gold. Let's go ahead and take a look. I think it smoked right through my levels. Yeah, there you go right there. Absolutely destroyed these levels. 32, let's see right there, 322.73. We only got a modest bounce right there up to about 23, something like this. Nice compression. Gold's coming way off. That suggests that a hawkish dollar is the case. We'll see. We'll see if the NQ does the same type of thing. As far as where would you be on this trade, I wouldn't really be ready to throw the towel in on this 38% level just yet, but I have to tell you, this is some serious negative price action. Let's go to our Euro USD level. Didn't quite get that. I have a lot more confidence in that one than I do in the gold level at this point, but gold absolutely got swept out of the box. Be very careful there. How about our gold trade, our 9 EMA gold trade? You can see right here, this is what we want to do. Right now, gold's definitely the worst off, taking it on the chin, off about 1.35%. So according to our rules, there's plenty of juice in here to trade a 1-minute chart. You're deep into oversold territory. Do you want to catch that bounce back? It's possible. It's possible, but we need to close up above that somehow, some way. And boy, this is a real heavy market right now. I got way behind on the live chat, guys. My apologies. Let me see. NASDAQ going down on daily. I already overbought for stocks. Oh, yeah, there's no question about that, Adnan. It's already overbought. The only thing is the big, beautiful bill. That type of thing is going to prop this market up. No question about it. US 30 is already diving. Let's see, US 30, we're looking at a futures. Still in positive territory, though. US 30 is right here. I want this gold buy, to be honest with you. I mean, we're right down in a zone where we should get a little love. Let's go ahead and check it out and see if we do get it. 9 EMA with RSI. We're looking for that close right above the bar. Right above the, not the bar, but the 9 EMA. Now, one thing you'll notice is that I'm doing all of my analysis in my trading here on TradingView. Now, I know a lot of you guys are using MT4 and MT5, especially if you're with Switch, and there's absolutely nothing wrong with that. That is the order entry platform. Just remember, there's this Pine connector functionality where you can get a 14-day free trial. You can connect your TradingView to MetaTrader 4 and 5 and still get your trades in. I know at Switch we have a few clients that use this. This is becoming a hugely popular API. So if you are a TradingView trader, great. We're speaking the same language, but you can easily integrate TradingView into MT4 and MT5 and execute your trades through Switch that way. I definitely would consider doing something like that if you are a TradingView fan. I know that if you're with TradingView, MT4 and MT5 can be a little bit clunky. They don't move quite the same way, so you're going to have to really learn a new platform. But we're sort of in an interesting type of a situation now. Everything's moving so fast, guys. Technology is moving so fast that we're going to have a lot of things that we can use in the near future. We've got algobuilder.com, which is another free thing for funded traders or traders that have funded over at Switch. So, if you want to build an AI strategy, get in there and work with this 9 EMA if you don't know where to start. Right here, I can tell you we're looking at a buy market. We just got to get the close right above our 9 EMA. So 1 minute chart. We're still working on the 1 minute. What do you got right here? That's a no trade. We've got to close decisively above that 9 EMA. We're not messing around. We're not looking for anything. We're not looking for anything that is borderline. If it's too close to call, don't do it. Obvious, guys. Easy, obvious trades. We're not going to sit there and try to be a genius and use I don't know. There's all sorts of different ways. Spaghetti models they use to model hurricanes. That's what I saw a guy trading with those, trying to figure out where hurricanes land and apply that to the markets. And I went, that's way too hard. That's way too hard for me. Let's just stick to our guns. Let's build a strategy, good entries, good exits, and we'll be just fine. Let's go ahead and take a look at our NQ. All right, we're crushing that trade. We talked about that setting up beautifully. That's exactly what we're looking for there. I would just sort of say take the money if you want it at this point. We'll go ahead and let it play out. I do believe we're going to get filled up, though, just filling in that beautifully. I mean, that's what we're talking about. Okay, so is this a trade right here? Yep, there's your close right above it. Let's go ahead and buy the market here in gold. So, and remember, my leverage isn't exactly accurate. I don't know what size I just put on this gold CFD, but right there would have been our entry point. So the question now is, what's our trade going to look like? Okay, there's our entry. Your exit needs to be down here somewhere. 33.11, something like that. So if you're risking $7, something like this, you're risking about $7 here. So we're long from what, 318, something like that. So if we're long from 319 to 311, we're going to need to get 327 somewhere up in here to actually make that a one-to-one trade. Is it doable? Yeah, it's doable. We have to get back up over that key level I showed you, though, 322. That could be problematic. You can see right here we're having a good fight. We're fighting a real stiff trend in gold, though. So I would call this a higher risk trade just because we're trying to pick the bottom, essentially, and we're not necessarily guaranteed of anything. So we're watching closely here, fighting such a tough trend with a 1 minute chart. You could get into big trouble, but just that fast, the market could go in our favor and easily pay us off. You can see that NASDAQ trade sort of bouncing back a little bit. Would have been real hard for me to pass on taking that money. Things have just sort of changed. They're always going to change with NFP, guys. They're always going to change with NFP. So I'm watching closely. Out of NQ. Let me see. Isaac, I'm out of the NQ. Great call, Maestro. Thank you. You like that? You like that action? It bounced back up, though, the NQ. I don't know if we finally hit our target or not. And yeah, I mean, that's tough not to take that when you're just looking for a few more bucks. I don't know. We'll go ahead and let that simmer. But this type of bounce back, that's NQ, guys. That's futures. This thing will bounce back, wipe out all the shorts that are using 1 minute symmetry for their stops. And then what? Now it's cutting you up. It's coming back to break even. Still in great position to come down here and touch our profit target, but I don't like it as much as I did. This right here, this gold trade could be an absolute duck. This could be a real tough one. Yeah, it looks to you always gotta remember you're fighting trends, and when you're fighting a big time trend like this on a 1 minute chart, I mean it's high risk. There's no question about it. 1 to 3 to 5%, something like that. We want essentially the same thing we just did on the NQ, but you wanted it in gold. You wanted to fill this area. We got that big gap down. That's the area we really want to challenge. But man, we're so far down. I just don't know that we get it. But never say never. Remember, guys, your trades, a good trade has a good entry. If we're trying to pick a bottom here, it's tough to beat our entry. If we've got a finite stop loss, we know where we have to get out. That's just the bottom line. And we also know the potential of really pulling in some big-time profits on this type of trade. A lot of traders, the according to Hoyle, the big ones, the 5X and 6X payoffs, their profit target would be right up here in this NFP bar. It'd be somewhere up there in the 40s, 33, 41, looking for that big bounce and catch the bottom. I call that a rich guy trade because, you're going to, let's say you trade up to like 33.28 or 32. I mean, you've already made so much money. Do you stick with it? I don't know. That's what I call swimming in the deep end of the pool. That's for sure. All right, guys, let's take a good look at this report, and then we're going to get a big, beautiful bill update. We're going to see where the vote's at, and then we're going to go ahead and sign off. I hope you guys had a little bit of fun today. As far as I'm concerned, this Euro USD trade would be probably my pick to click the rest of the day. I'd be looking right there at 116.93. I love that level, especially if we get extended a little bit here. I think we've got a real chance to hit that one. As far as this gold trade went, you can see, don't call it a comeback, but it's coming right back up here. If you can get maybe a 5-minute close going into really that U.S. Open, if you can get like a 5-minute close up above this zone, there's a good shot that the bottom's in for gold. There's a good shot there. But you got to get that confirmation, that close, and see we're already in the market on that 9 EMA trade. That's why I call that a high risk trade. No question about it. Still though, we can get it. I mean, it's there for the taking. All right, guys, let's go ahead and unpack this unemployment report, and we'll go ahead and get into it. All right, increased by 147,000. The unemployment rate changed little at 4.1%. That's fantastic, right? That's a good number. That's a strong number, and it definitely is shaking our markets up. You can see that. You can definitely see that. What are we looking at? In June, number of long-term unemployed increased by 190,000 to 1.6 million. Long-term unemployed is when you're on the rolls for quite some time. What I'm interested in is the very last paragraph. The last paragraph is what I'm interested in. Why? Because the top line is what's going to grab all the headlines. Everybody on CNBC and Bloomberg, and there's going to be tweets. I'm sure Trump's already sent tweets out. There's going to be word out of the White House. There's going to be every talking head's going to sit there, and they're going to critique this thing 6 ways to Sunday. Okay. The devil's always in the details. If you don't learn anything else, understand that the last paragraph, very important to these BLS NFP reports. All right, here we go. I haven't read this yet. The change in total non-farm payroll employment for April was revised up by 11,000. Oh, no. That's interesting. 147 to 158, and the change for May was revised up by 5,000 from 139 to 144. With these revisions, employment in April and May combined is 16,000 higher than previously reported. Rarely do they revise up. Remember, last time they revised down. Now we're revising up. That's one of the reasons why you're seeing really the hawkish break out of some of these markets. The hawkish stuff is absolutely huge. Why? Why would that impact our markets the way that it has? It's not the biggest beat in the world. What we're starting to see is that maybe that situation isn't as bad as we thought. And if it's not as bad as we thought, maybe it's better than we thought. And if it's better than we thought, maybe the Fed doesn't cut interest rates. We got a chance here in gold. We got a chance. We might have caught the bottom of that. Check it out. There's your key level. There's your 5-minute close right above our key level. I'd be watching 320, 33.20 like a hawk. If we're going to get that big bullish move, we're going to get it right now up over that level. That's a big one. That's a big one. NASDAQ's reverse course, which shouldn't surprise anybody. Still got a pretty good bearish move. Let me see. Yes, sir. I'm happy the USD JP went my way. Been holding since Tuesday. Fantastic. Yes, sir. Good to hear. All right, everybody. I'm going to go ahead and sign off right now. Let's go ahead and take a big, beautiful bill look. Let's get an update. Let's see. Final vote in the U.S. House. House Republicans open debate and full vote. So they're still debating right now. Open the way for debate and full vote. Okay, they're still debating. We'll see what happens. The filibuster, a lot of folks believe they're going to get filibustered today. We've already saw a very long speech this morning out of one of the House Democrats, essentially trying to stall the vote. They don't want the vote because they know that it's going to pass probably and that Trump's going to sign it on the 4th of July. This could be just an absolute huge situation for Monday's open. Markets are closed tomorrow. When they reopen Monday, look out. Look out. All right, guys. That's a wrap for me today. I've gone on long enough. I've gone on, almost 40 minutes. Like I said, be sure to stop by switchmarkets.com if you do need a broker. If you're interested in some educational materials, How to Trade Calm YouTube channel, check out all of our strategy videos. There are a bunch there. We're going to be releasing another one next week that's going to tell you how to get up and running as a day trader in 2025. Also, you've got the How to Trade community. We've got our trading academy over there. There's a lot of content in there. Feel free to cruise by and check it out for free on us. You can also see me there every day or on one of these YouTube channels. We're going to be streaming live. The Switch Markets Live community is taking shape now. And remember, what is that? That's the traders from How to Trade and the traders from Switch. We're looking to build a really strong community. Remember, you can always private message me anytime you'd like. I try to get back to you within a few hours, but I'm going to be out of the office for the July 4th holiday, so I probably won't be getting back to you until Sunday or Monday. Head on over to How to Trade, click on my picture, send me a private message, and I'll be sure to get back to you. All right, everybody. That's a wrap. Gold just tanked? I don't know. This gold trade's it's not tanking just yet. Gold's in pretty good shape. I like this one. This one's really starting to impress me here. I like it. Thanks. Absolutely, Jeanette. You're 100% welcome. Thanks for joining us. I know it's late. It's got to be late or early in Australia. I don't know. It's early here, so it'll be late in Australia. That's for sure. All right, everybody. I'm going to go ahead and sign off. Have a fantastic trading day. Be careful. Be careful. Take a look at our NASDAQ trade. We had an opportunity to take a lot of money off the table, and now by sitting in there, now that thing's back to break even and maybe a little negative. That's the kind of day it's going to be. NFP, going to drive participation right now. Big, beautiful bill all day long is going to be driving participation. If you're trading U.S. stocks, you go into power hour later today, about 1 to 2 o'clock my time, 3 to 4 o'clock Eastern. You've got to be very, very careful because the news is going to break hot and heavy, and it's going to break right before the U.S. close. I wouldn't touch that with a 10-foot pole. If you don't make money in the first couple hours of this morning's trade, get out. Come back Monday. Monday's going to be very, very good. Today, limited liquidity, huge news cycle. You could get hurt real bad. Don't get hurt today. Don't get hurt today. And if you just made a bunch of money, put it in your pocket. Come back Monday. All right, guys, that's a wrap. Have a fantastic trading session. So from Dillon, Montana, I want to wish everybody out there a happy Independence Day if you're in the United States. I know globally Independence Day, not a holiday everywhere, but if you're in the U.S., enjoy safely. Enjoy your hot dogs and your apple pie, and maybe even have a few adult beverages. Just don't go driving. That's what I always say. Stay safe. You want to be around to trade Monday. That's a wrap, guys. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.